RBA Holdings develops affordable bank-funded housings for individuals and corporates. RBA has a market cap of 64 million rand, a price-to-earnings ratio of 5, but pays no dividends. So a lot of these are not paying any dividends. It's not surprising given the industry that they're playing in right now.
Yeah.
But change of CEO at RBA.
Yes, recently, correct.
Look,
it's a plucky little Joburg-based company, operate our offices in Braamfontein. They mostly do developments on the infill land between Roodepoort and Soweto, to be quite specific. They've got some other projects going on. Davy Wenzel, the founder, has recently left, which is a bit of a concern because he's also the major shareholder. But we'll have to see how they proceed from here. They've got a new CEO, the financial director, has remained in place. The space, again, extremely desirable, lots of potential customers that go to the bank, get the loan for like 200, 300, 400,000 rand. They then build a house and then, it all works. So they're a small operator, but they could do well. But there are a few warning signs because small companies with management coming and going isn't necessarily a big selling point.
I said it had a market cap of 67 billion. It's actually 67 million, bumping that market that cap up. But like Paul said a little earlier, in terms of the shortage of housing we have here in South Africa, is RBA Holdings sitting in a great position when the cycle turns?
Well, it's not really the cycle. I mean, the demand's there. They've got to execute and get it right. I mean, I knew David Wenzel, and I quite liked his idea. And then I saw, the ideas he was putting forward about how he's going to take the business forward. But then I see when he left, they said there was a disagreement on how things must go forward. But I mean, if you just contrast RBA Holdings and Calgro M3, you see now Calgro has really, I think it's up almost 10 times, where RBA could do something like that. But I mean, the risk of RBA going out of business is very high. And they've also been raising more capital, issuing a few shares here and there. It's pretty risky.
Part of the reason for raising capital, I understand, was to develop rental stock. So the company would actually own physical buildings which people would then rent from them. That's an alternative business model, obviously less cyclical, but it does consume capital while you build up the base so that you can get the annuity revenue. I'm going to go with not hot as well, but as I say, quite a plucky little operation and maybe one to watch.
So hot or not in this one?
It's an option in my mind. Buying RBA shares, you're buying an option that potentially it comes right and you can do very well. But as an investment, not hot.